it's working. Hi, everyone. Hi, everyone. And yeah, welcome to the crypto winter and the after winter time for startups. Welcome. My name is Maria, and I'm the founder and CEO of Ekolance. At Ekolance, we train professionals to work in blockchain, and we provide a platform for blockchain companies where they can hire these trained professionals in positions such as developers, community managers, content creators, marketers. So everything that a blockchain startup needs or a blockchain company needs. And today I have investors and also startup founders to discuss the current situation in the crypto market. We call it the crypto winter. And what we can expect after the crypto winter and how this crypto winter is affecting really the startup world. So I would like to ask my panelists to introduce themselves and to tell us a little bit about what they do.
So hi everyone again. I'm Susanne Fromm, and I'm the GP, the general partner and co-founder of Vanagon Ventures, which I founded together with my partners Axel and Sandro. They're also here. You want to wave? Over there, hi. Yeah, so we are a venture capital fund that is focusing on startups at the intersection of Web3 and positive change. So founders that are using technologies, Web3 technologies, in particular blockchain, to solve global coordination problems that are responsible for some of our most pressing problems. And this could be, of course, financial inclusion on the one hand, but also planetary crisis. One prime example is, of course, climate change, which has a very inefficient market for carbon emission trading right now. So one of our investments is Senken, is currently the largest on-chain carbon marketplace.
Yes.
All right. Hi, everyone. My name is Matus. I am a co-founder of a startup called Deriverse, at which we are building a decentralized exchange for perpetual swaps on NFT floor prices. Previously, I spent 2 years at Outlier Ventures, sort of, helping founders design their token economies. I helped with 50+ startups. And before that, I helped to set up a VC fund called Rockaway X, where we were early investors in projects like Solana, Oasis Labs. So I've been around for 5 years and looking forward to the discussion.
Thank you. Yeah, David.
Great. Hi, everyone. My name is David. So as you can see here, I haven't founded anything yet. And we are a venture capital company investing in the tech space, so tech space as a whole. Obviously, blockchain is part of it. I guess that when you have this scope of tech, you can definitely understand maybe deeper what's going in each segment, etc. I would say that on our side, we try to do our best to identify the disruptors, and blockchain is definitely one of them. And yeah, I guess I'm gonna stop there and move to the questions.
Thank you. Thank you, everyone, for introducing yourselves. So, because we're speaking about crypto winter here, let's first discuss what were the reasons for the crypto winter. And we can do like a analysis starting from the top. What were the micro reasons for the crypto winter, and what were the macro reasons for the crypto winter?
I would basically put it in two boxes. One, of course, the macro category, and one is the crypto-specific one. I mean, as everybody knows, macro, there are lots of effects coming together. So, of course, a lot of post-COVID pain, inflation, the war against Ukraine, more inflation, Fed policy, and so on, and all this, of course, forming a lot of pressure. and at the same time coinciding with crypto-specific factors like the crypto market cycle, which is driven by Bitcoin halving and also reinforced by a specific event that we all know.
Yeah, I will agree with you, and I will add up on that. Basically, during 2020 and 2021, we had a huge value creation that wasn't specifically, had no, let's say, tangible behind it, whereby people were pumping their values, their position by leveraging. So a lot of platforms were, lending money, and at the end of the day, they didn't do any risk assessment or try to understand what is the collateral behind it. And so just, free money is there. And that was also one of the impacts.
Yeah, and I would maybe add that, in terms of some of the micro considerations, a couple of negative things happened. For example, the Terra Luna collapse, which was basically caused, it had its source in the macro environment. Interest rates were rising, valuations were coming down, and simultaneously someone unstaked $2 billion worth of USD from Anchor, sold it. That depegged the USD stablecoin from the dollar, and as the price of Luna, which is the token which was supposed to back up USD, was going down, suddenly we realized that there was not enough Luna to support the price of USD, and the whole thing just collapsed. So for some reason the token design of that project did not account for an environment where both USD and Luna were going down. So that's one thing, and then obviously the whole FTX thing. I mean, enough has been said about that, but I would maybe just add that from the regulation perspective, on the one hand, you have an environment where anything could be a security, and you could go to jail by for selling it. But then on the other, somehow we're not able to prevent, I don't know how much, $8 billion, going missing from your balance sheet. So worsening macro, poor token design choices, and regulation. And perhaps I would also add that there hasn't really been real innovation that would be able to spill over from crypto to the real world. Maybe I'll just pause there and
So I remember when the Luna crash happened, I was at the conference. So the first day of the conference, it was, everyone's happy, everyone is like on a high note, and then the Luna crash happens, and the next day everyone was so agitated, and then people having crypto panels like speaking about crypto and the market conditions were like so confused. They had to catch up what exactly happened and read like these reports that their teams were sending them to really understand what's going on. It was such, the whole mood was like so in the bottom of everything. It was really, really interesting to see. But yeah, so now we have been in this cycle for a longer time, and it's not the first winter, right? So we have experienced other crashes in the crypto space in the past, and also like economical crisis. So how do we compare this one to the previous ones, and what can we learn from past crises and from this one?
I think the positive thing is that we know it's a cycle, and so we know after the winter comes the spring, which is nice. By now we also know that there's like a similar price development, though depending on which cycle, also on different orders of magnitude. We see similar behaviors. We see what is, for instance, very typical that if you have a crypto winter, good news tend to be ignored, and if you have a bull run, then bad news get to be ignored. Perhaps an exception to that was in the first half of 2021, when there was this dent in the bull market that was caused by the news on the crypto mining crackdown in China and Tesla's stopping to accept Bitcoin. There was perhaps a little bit of a exception, but yeah, that we see every time. Yeah, and then I would say, how does it compare to other cycles? Perhaps I would draw a comparison to the .com bubble, and there we saw similarly. It's also like a hype cycle, a technology hype cycle, and very similarly we had a lot of inexperienced investors in an asset class coming in there. It was just not digital asset; it was the stock market. So it was also quite comparable. I think
I will add just that I would say that in 2017 till 2018 was more of a retail cycle, whereby not a lot of institutional were there. They were maybe talking about it, trying to understand what is this beast, but it came only later, and so that's basically 2020 and 2021, which is more of an institutional one, where there is a sort of FOMO now. All these governments are talking about it, trying to implement it or not, ban it. There are also a lot of players that try to have it in their portfolio just to say, yeah, you know, we have it, but they don't understand it. So there is some good effect to it. In my opinion, it's actually healthy what is happening. So it takes out all the scam and all the people that shouldn't be here.
Yeah, so in my experience, so back in 2019, we were trying to fundraise for this VC fund that I was helping set up. We were raising $100 million, and it was virtually impossible. Basically, the sentiment on the market almost universally was that, you know, we're not even sure if this is going to be around, 5 years down the line. And the main difference between the last bear market and this one is that, almost everyone thinks that this is staying. This is just another kind of down cycle. And if we build hard enough, if we think about it hard enough, the next bull run is coming. If we actually manage to come up with something that's innovative, useful, and actually positively impacts lives of many people. So that's one major difference. And then of course NFTs, right? Like what NFTs did was that they actually made crypto understandable for the general population. So I think the situation is very different, and you can see that in the sort of the price of Bitcoin, the price of ETH. Like how much down they went. Obviously it was very different in the bear market of 2018, 2019, and this one. So yeah, I'm much more optimistic in this one, and much more sort of motivated to build something, because I know that it's very likely to stay.
So David, you just mentioned something that, in your opinion, it's good to have such cycles, also bearish cycles. And can we maybe speak more about this topic? Why is it important to have both bullish cycles and bearish cycles? What's the benefit of this?
Do you want to start, maybe?
Thanks. So I think these cycles in general, these hype cycles are, on the one hand, they of course can be super painful. They can they cause a lot of heartache because of course especially retail investors can lose a lot of money in those cycles. On the other hand, they are super important for technology adoption, because they are drawing so much attention. I mean, what is more interesting than rapidly rising prices? It draws like everyone's attention, and it's incredible. So you get...
It's a huge FOMO.
Exactly. So everybody's looking there. You get a lot of attention. So there's a lot of awareness of, cryptocurrency, for example, or NFTs. And then people start to acquire some knowledge. They read about it, really trying to understand basically what it's all about. They also tend to collect first-hand experience or with wallet and whatsoever. And then also with that, a lot of talent is drawn into the market, and they fall into the rabbit hole. They start to work for these projects, And then, of course, you have this situation when then there's this expectation are completely decoupling from reality. There's a lot of overestimation of how fast the adoption will go about, and so then at some point, of course, this bubble bursts. But when you look at the talent that is basically has entered the space, they tend to stay. They tend to stay true once they fall into the rabbit hole to the technology, and they tend to continue to work there. Perhaps not for the same employer always, but their ideas, their innovation, their entrepreneurship, they contribute then massively to the next cycle.
Yeah, no, I agree with that. Maybe I would add that I just view cycles as a prize discovery process, right? Because we come up with something new, and we have like very little idea why it's useful, what can we use it for, and obviously expectations are blown up because we are greedy. Then we realize that actually we can't use it that much, so the prices go down because we are fearful. But then if enough time passes and when enough work has been done, I think the prices stabilize, and so I think gradually these bull bear market cycles will be much more smooth, and whether they're good or bad, I mean they just are, they're normal.
Yeah, well, actually, I agree with that. There are some that are good, and for others are pretty bad. But there is a small story that the co-founder of LIAN always tells me, and I kind of like it, so I'll share it with you guys. Hypes, basically, it's like you imagine yourself, you take your small boat, you go on the ocean, right? And when you're there, eventually, you start to understand that there are holes, and you see water getting in, and you're like, oh shit, I need to fix this. And that's pretty much the hype. Hype makes you understand that there are problems, and then you fix them so you can come stronger and continue your journey. So that's it.
Nice analogy.
Yeah.
So let's speak about what, from an investor's point of view, are fields right now in the crypto space that are still attractive. Because we know that investors are a bit hesitant right now to invest in companies and in business ideas. So what are fields that are still attractive for investors?
Well, I'm not an investor, so I'll leave it to you guys.
Thanks. So I would say at this point in time where it's really still very hard to access capital, it's those areas where the projects don't only have to rely on the typical crypto investors, and so in the previous cycles, the killer application that have emerged, they mostly were growing within the crypto bubble. They were basically fed at least in the beginning from funds within the crypto bubble, cryptocurrencies, DeFi, NFTs. But now we're seeing, at this moment, there's already a spring happening of projects that are accessing also other funds. And these are teams that are solving real world problems. And for me, the killer application that I clearly see is regenerative finance. This is also obviously basically what we believe in, because we based our fund on this thesis. So the intersection between Web3 and climate, for instance, or other positive change areas. And so we see, of course, there's lots of investors out there who have understood the urgency of our planetary crisis. And so there's more and more funds available for these kind of projects to thrive. And so I think we are really approaching an inflection point here.
So I agree, but at the same time, I disagree with the refi as it is today. For me, it brings me back to those moments where everyone was talking about ESG, like sustainability, impact, and it was more like of a greenwashing, which is not your case, because we discussed about it, and it's actually great to see that there are pioneers that come in and provide what is missing today in the market. So some players will manage definitely, like you or others, to let's say push refi up there. Today, for some reason, I would take my focus a bit somewhere else. I would say eventually on the capital market development, but like options of staking. I know it's tough. I go straight to that one. Another topic that is also very interesting for us is cross-chain bridges, basically to understand, how we can work together. That's going to be probably huge. At least we believe in that. And the last one will be all the different layers. So layer 2 eventually that provides services. But that's our view.
So I've been talking to a lot of investors in the past months, and based on what they told me, it seems to be sort of like structured around, refi is one big topic, but there's also stuff like under collateralized lending in DeFi. Then there is decentralized infrastructure and relevant hardware. So as opposed to using services of telcos, why not having your own piece of hardware which you can use for Wi-Fi and other purposes. Then also liquid staking seems to be something that they are interested in. And then there are problems like no one knows how to do taxes, and it's impossible to go over 3,000 transactions that you did. So that's also something that they want to see, and then I don't know. I feel like the current setup that we have with Ethereum, Solidity. There are just so many holes when it comes to its security that I think we need something better in order to make DeFi more robust. And a couple of examples how this is being done is projects like Aptos and Sui, which are using the Move programming language, which is supposedly more safe when it comes to this. So I'm just wondering, guys, like what do you think about this? Like, is this something that you are looking at, or?
Yeah, so not specifically because we have this refi focus, but it's all, basically all what you were mentioning, it's will be very important infrastructure that we will also be using from the refi space. So so I definitely agree with the areas as well.
All right, so Susanne mentioned that there's a spring coming. And let's talk about something positive, right? Because we were speaking about the crypto winter. So what comes after the winter? And like, what are the steps we will take in order to overcome it, in order to come to the next phase?
I will start on that one. Basically, regulation, guys. I know it's not a good news, but it is. I guess that, every time that something happened big, FTX, etc., then people start to look at the industry like in a deeper way. Just out of curiosity, how many people here are more concerned about the startup part? Could you raise your hand if you have a startup or planning on? Okay. So we have to be careful what we're saying. But basically regulation, that would be definitely something to look at. Eventually what's going to happen, in my opinion, is that we will go into more sophisticated services, capacity. The industry itself is building itself, actually, and for that you will have a higher requirement. Even for us, when we look at investment, probably we're going to talk about it later, but we want to make sure that people are solid, strong enough to sustain what might or might not happen.
Yeah, and I totally agree, and I would add definitely also professionalism, I would put it, because there's lots of standards that have developed over a long time in other areas, also in Web 2, that are now coming to Web 3 and just making the whole, for instance, application security and all this, and making the whole space.
Yeah, that's why probably Maria can talk about Ekolance.
Yeah, so what we do at Ekolance actually is, I wouldn't call it refi, but it's something very important, I think. It's a use case that for me, cryptocurrencies were made for, and this is the financial inclusion. So we have people from emerging economies, and I have someone here from my team that came from Nigeria. And we have a very urgent problem here because people from Nigeria right now, for example, do not have access to cash, which I was really shocked about. And if you come to the EU with a few dollars because you don't have access to cash and you cannot exchange this money because exchange offices have a minimum amount to exchange, what do you do, right? So for me, this is something that crypto can help with, and this is so urgent to implement. So for me, the next step in order to overcome the winter will be also access to crypto payment services, and like we have to make financial inclusion more present, and it has to really be on the top of the agenda, in my opinion. And this is, crypto is predestined to do that. So yeah, this is my opinion, what's really important, because also regulation, of course, is a big part of that. And I had a conversation earlier with someone saying that due to regulation, of course, a lot of companies will cease to exist because they were not made to be regulated and their business models do not function well with regulation, or regulation will make their services more expensive. So probably this will also come to another wave of crypto companies disappearing, but then more stable, more sustainable businesses will appear in the market. So guys, let's now talk about this, also the investor side of like how investors are reacting to the crypto winter, and like what do investors actually want to see in order to invest right now?
So Matus, are you listening to Susanne?
I'll be making mental notes.
Okay, so what I observe right now, when you say how investors are reacting to the crypto winter, and this is not true for basically other areas I was describing where we have some spring already, like refi, there's still a lot of inertia in the sense, some herd behavior. That there's really still some reluctance to invest because others don't invest. I mean, which is to some extent understandable because you cannot alone in the, you tend to not to be able to sustain one startup just by yourself. You're also reliant on other investors. So that's what I see that is still happening. What do we want to see in startups before we invest? A lot of things, but since we invest more, seed stage, of course, the main part is the team, and here the kind of things we want to see in a team. So one factor definitely is resilience, is grit, persistence. This is one part. Then we want to see definitely some agility. The agility in the basically you're on your way to product market fit, and you have to be super responsive to feedback. So basically feedback of your customers or your potential customers, the feedback of your investors, and then pivot. Even if it's just very little. Changes that you're making, but this is something which is super important because you have to be super agile. And the third part I would say is you have your ability to hustle and your ability to communicate, especially because we are in a market with a lot of complex products, and it's kind of not, it's an art to really break it down to make it easy to understand for everyone. So if we see this, we very much like that.
Yeah, I follow exactly what you're saying. I would also add on top of it, the team obviously, but a product fit. Guys, if there is a need out there, go and fill it, because obviously then you will have people willing to buy from you. And that's, I would say, a very important element. You talked about resilience. I like to say also stability. If you start something, make sure that the people that are with you are committed to it, convinced by the idea, but also committed. So be more generous, share with them, etc. And one thing, and that's more maybe a piece of advice, if I might say, to all the startups here. Please stop saying, yeah, we want smart money. Like, if there is money, take the money. Be smart, take it, bring smart people. Like, it makes more sense. You can find advisors, people that are committed, that are willing to give even volunteer, like time to help, but take the money, like literally. That's my piece of advice.
It's interesting what you're saying, because I've been hearing this with the smart money a lot. So maybe like a follow-up question towards that. How can a startup convince an investor right now to invest and develop like a relationship with the investor that, well, let's not call it a smart money, but have a relationship beyond just a financial relationship? Because for a lot of startups, they need connections, they need advice, as you said. And of course, saying find advisors, but a lot of startups are also wishing additional support from their investors and looking for investors that can help them in the field of work that they are in. So a lot of the founders, they're 20-something, 30-something, maybe they don't have extensive experience and extensive relationships, and they're hoping for that kind of investors. So how do you, get an investor like that? How do you develop a relationship where you get beyond financial support?
So I would say that, first of all, where I was quite surprised coming from more the traditional space, financial traditional space, what I discovered with all the ecosystem is that people are more willing to share in blockchain, giving contacts, helping each other. So that's great, and that's something we should definitely keep up with. Now, how to attract? I would say that, first of all, keep your feet on the ground. Don't oversell it. Sell it, obviously. We're all sales here. So sell it, but sell it smart. Don't be like over pumping whatsoever. Be pragmatic in your approach. Make sure that people, are listening to you and they're looking at, a very simple example. When for instance, we look at the balance sheet. If I look at the CEO salary and he's higher than his CTO, I would say like, okay, the guy doesn't believe in his project or whatsoever. So those are details that we look at and we say, okay, the guy is not committed. He's just here to do money, and then, go away. So that would be also what I would say personally that could help.
Mm-hmm. Yeah, and definitely listen, and then kind of process what is being said to you by the investor, and then in the next conversation show basically that you understood it. We have actually a very cool example just recently of a startup which we liked. We very much liked the team. We liked the general concept. It was in the education space. And but we didn't like kind of like the narrow market segment, and we also saw that there was some issue with scaling the solution, and we gave this feedback, and then a few weeks later they came back to us. They had changed their name. They were addressing a much wider segment, and what they had done, they basically integrated AI to automate. In that case, it was course creation that completely helped them scale the product. So we were very impressed by that. And yeah, something like this is definitely a good basis to continue. Yeah.
Thank you so much, everyone, for your contributions and for answering the questions. And thank you, everyone, for being here and listening. Thank you.
Thank you.
Thanks.